ConsenSys, a developer and service provider focused on Ethereum, has closed a $200 million round of funding at a $3.2 billion valuation. New investors include Marshall Wace, Third Point, ParaFi Capital, and Think Investments, who join follow-on participants including Animoca Brands, Coinbase Ventures, and HSBC. This round quickly follows a $65 million raise, announced in March 2021, which included JPMorgan, Mastercard and UBS, in the frothiness of today's crypto market, which has seen the total market capitalization approach $3 trillion and approximately $15 billion in venture capital invested in 2021, a $200 million round could seem rather pedestrian, especially for a company that was founded in 2014. However, according to Joe Lubin, CEO and founder of ConsenSys, who also happens to be a co-founder of Ethereum, this Goldilocks round is just right for the firm at this point. In an interview with Forbes, Lubin said that this raise could have been larger if we wanted it to be. This announcement comes just as ConsenSys appears to be finding its stride. The company, largely self-funded by Lubin with his personal wealth, was reported to be spending up to $100 million per year. In 2018 it had to undergo a substantial reorganization that saw the exodus of approximately 50% of its employees. Forbes reported at the time that the major cause for this dramatic step was Lubin's largesse in funding a wide constellation of projects with little oversight or follow-up to ensure that key deliverables were met. These spokes made relatively little direct revenue, and most of the funds coming into the company came from consulting services from another part of the business in the form of cash and equity stakes in clients. Lubin disagrees with this characterization. "I would argue that when ConsenSys started, there was no ecosystem. The technology was incredibly immature, so we ran lots of experiments," he says. Some succeeded wildly and were spun out as separate companies. While many of those experiments were terminated, we still learned a lot from those experiments, and throughout the way, web consistently gained traction. But regardless, that burn rate was unsustainable. What came out the other end was a more focused, streamlined organization with defined boundaries between the development and consulting services. It was also aided by the massive jump in the price of Ether, Ethereum's native asset, which has surged 489% year to date. Lubin says that now the company is profitable, and a few of its flagship projects are beginning to see significant traction. Chief among them is MetaMask, a self-custodial wallet, where a user controls the keys safeguarding their crypto as opposed to an exchange such as Coinbase, which has become the industry standard for users to interact with Ethereum-based blockchain applications.